Good morning, everybody. How are you all doing today? It's now Monday the 12th, and we're going to talk about Bitcoin. I hope you baby whales and mini dolphins have had a fantastic weekend. Make sure you guys get a lot of rest because on the weekdays, that's when we snap back to work mode, right? So I hope you guys have had a great weekend in terms of learning a lot. Make sure that we never chase profit. The profits will come very naturally and the money will flow in, but the most important thing to remember is that we chase skills first. And once we obtain these skills and then we refine them over time, that is what is going to allow us to be successful. We don't ever chase the profit, guys. What we chase is good trading practices. And when we focus on good trading practices and making sure that we enter good setups, that is when we are going to ultimately be much better at trading in general. So please make sure that you never ever chase profit. Focus on honing those skills until they're razor sharp and you have this focus where you can read these charts and bang down these technical analysis in a very easy way. So I hope that you guys are absolutely taking a lot away from these lessons that I'm trying to create for you, because that is the ultimate goal, to improve your skills, to improve the cryptocurrency community and reach a very broad audience. And speaking about reaching a broad audience, I do believe that steemit is one of the best communities out there, and there's a lot of potential in particular to find very good analysis on there. So if you guys appreciate my work, I would also appreciate an upvote on there as well, so to reach a broader audience. And other than that, make sure you guys like and subscribe to the content if you truly believe that it has helped you immensely down the road. And I want to make sure that I release a lot more content like this down the road. And if you guys have noticed, I'm really stepping up my game, right? I'm really stepping up my game in terms of doing very detailed technical analysis and also adding 45 seconds or 3-minute little tips here and there throughout the day, and also just generally talking about things that you guys might not even have experience to, or what other people don't even talk about, such as hidden walls especially as well. So other than that, let's get started with our Bitcoin technical analysis. So Bitcoin's been giving me a lot of a headache right now, and I'm going to keep focusing on my technical analysis that entertains the idea of a bullish uptrend, because that's what I firmly believe that we are in for now, okay? I don't think we're out of the woods yet for the long term, or actually medium term even. I do believe we are going to definitely correct, but for now, I'm going to remove my very bearish scenario off the table. Doesn't mean that it's not going to happen, but in this particular video, it is going to be specifically talking about the uptrend. So I'm going to talk about my WXY correction first of all, and how I see this. I see this as W, I see this as X, and I see this as Y right here, okay? Actually right here. WX. Let me get my toolbar up here. This is going to be a more complicated type of technical analysis. Again, I don't think I can keep it very short and to the point, right, in a very basic way, because the way I do technical analysis is I hammer at it. I hammer at it until I get it right, and I believe that if we put in a lot of hard work into our analysis, it eventually pays off. So I see this as A, B, and C down over here. And now that we have a W over here, and this X point, make sure you guys are reviewing my previous day's videos where I talk about WXY corrections in heavy detail. So now I'm going to call this my A. I will call this my, excuse me, A, and I call this my B, and I'm going to call this my C. Simple as that. Down over here. Actually, my apologies, the B is right over here. And the way I count this is that the A structure can have a 3 wave as well in here, and I'll make this a smaller degree to make it more sense. Sorry, make it make more sense. So I see this as a 3 wave structure coming down over here. Excuse me. And I see this as well as another ABC in here, A, B, C. And then I finally see the 5-wave structure like that. I'm just double click on this fast so I can change it to a minuet time frame over here. So I see this as 1, 2, 3, 4, and 5. And now we have officially completed a WXY correction. So A, B, C, W ends the correction. So people will rally and they try to create a higher high with an impulse wave. And then after that, we take this point right there where the impulse wave started. It goes up. Elliott Wave says that we could retrace no more than 100%. Otherwise, the impulse wave considers it a failure. So now we're going down from A, B, and C like this. And this is going to be a prediction video, just so you guys know, okay? I will have a very specific price point, excuse me there, and a target in mind as well. A, B, and C right here. And I just want to be very transparent with you guys as well, okay? I want to be incredibly transparent, and I want to show you guys as well that I've entered a long position. I'm in about a $7,000-8,000 position right now, and it's very funny that I actually I'm not really concerned by a few dollars. I entered it literally at the high right here because I thought we were going to uptrend, but in hindsight, of course, we're not uptrending quite yet right now. We're still correcting in here, but I want to be 100% transparent all the time. And I'm a scalper, right? I take very, very small trades, so I'm just gonna go for like a few $100s here. I'm just gonna get about $120 here. So I definitely always, guys, want to be 100% transparent with you with my trading positions as well, okay? And just so you guys know, in March, I'm going to step it up, guys. I'm going to start playing. I don't want to play these $7,000 to $8,000 day trading positions anymore. I will be playing anywhere between $20,000 to $30,000. So you guys are going to see me take it to a new level to relate to the people that are playing bigger as well. And then depending on the vibe and just the general feel of Twitter and YouTube as well, depending on how many people play different sizes of positions, I might even step it up to 50,000. If you guys remember in November and December, I was playing $80,000 to $100,000 positions, right? So we're going to get to that level, but I want to make sure everyone's comfortable and I can accommodate and I can relate to all different types of traders as well, playing with all different sizes of a bankroll. And if you guys have not seen my videos where I've grown $2,000 to $3,500 or any of those videos like that, make sure you guys check them out because I'm trying to relate and show that with a smaller account, you can easily grow it quite exponentially as well. So I have my tutorial, I think 18 or so, where I played on a small account. It was about $2,000 and I grew it to $3,500 in 4 days. So I hope that you guys like those kinds of videos that I'm releasing. So anyways, we have our ABC here, where X has failed because Elliott Wave says that the wave 4 or wave 2 cannot retrace no more than 100%. So then we get an ABC down there, which completes our A wave, and then we have our B right here as well, okay? We have our B, which makes ABC, and then 5 beautiful waves coming down. Now, I'm going to clear all of this out now that we have this. Now, let's talk about some theory that I always like to talk about from an Elliott Wave perspective. And I don't think a lot of people even know how head and shoulders really work from an Elliott Wave perspective, but I would like to teach you guys it. So we all know this type of basic impulse wave up. This is an impulse wave up like that. And then we have this. So you know what, let's make this a little bit better like that, okay? Right here. We like to follow the rule that wave 4 will not retrace into wave 1 territory. And the reason why this rule holds very true is because it acts as a support. What was previously a resistance now becomes a support. Now we're going to talk about how Elliott Wave works for head and shoulders, so you guys will get a very good idea. So we have our head and shoulders like this, right? We have our head and shoulders. I'm going to delete this line over here, just like that. Now you guys might recognize it just as a simple head and shoulders like that, right? Cool. I'm just going to make it more symmetric like this. So this is called the neckline, right? This is called the neckline. And the neckline is very favorable to play. It's one of my favorite patterns as well, where we wait for this specific section right here to see if it's going to break down or if it's going to bounce up. But before we play these positions, we need to understand the mechanics of a head and shoulders pattern and why there's a chance for it to bounce up and why there's a chance for it to bounce down. And to understand that, we have to talk about ABC in particular, okay? And there are many different definitions of how C can be. So for example, this is called a truncated C position, where the C does not really move too close to the A position right here. And that's where the neckline will bounce off of it, right? And then sometimes it will fall down and break below to create a double bottom. And then a lot of the times it will create something like a zigzag like this as well, where it falls down below it even more, right? And then what we use as a general target is this right here. This is what I use as a target. I take my base range of the head to the neckline. So this red line is called the neckline. And then we just extend it like this, okay? We extend it downwards like this, and that's how we get our target for the next one, roughly. And a lot of times it works flawlessly. So that is one of my favorite things to do. And I also want to explain it from the other perspective as well, because this is only the bullish scenario, right? Now, let's explain it from a perspective of coming downwards. And I do see an inverted head and shoulders right now, and I didn't really want to talk about it too much until I got to this specific video. And now for this one here, if this was the end of the impulse wave, right, what we see is the attempt of a new impulse wave that will start, okay? So this will start, let's make that a little bit higher. Wave 1 territory does not reach it still, when we make sure we acknowledge this. And then as soon as we get points 3 and 4, what we do is we draw a neckline like that. And we just assume that that's going to be a major resistance. And then what we do is we draw our wave 1 here. Now we have a trend, that's an impulse wave, that's a counter trend to the other side. And a lot of times it will hit it, right? It will hit it like this. And then it will bounce off of it, like that, right? And that's how we get our head and shoulders, right over here. And who knows, it might even come down one more, just like that. Does that make sense so far, guys? Okay, I'm going to explain it one more time to you. It goes like this, and then 2 position goes down there. And then we get a 3 position, and then 4, and then 5, something like this. Okay, just as an example. And a lot of the times why it bounces off of here is because I'm going to go to a more detailed time frame so we can see what I'm talking about. A lot of the times, this will make a subwave in here, a 1, and then we'll bounce off of it, and then it breaks out of it like this. So this is the bullish scenario of the head and shoulders that's inverted. Now let me just show you it very quickly of how it actually looks. So that's the left shoulder, that is the right shoulder, this is the head, like that. Beautiful, right? So these are how head and shoulders work. Now I'm going to start talking about this head and shoulders that I see in here right now. And let me give you guys a clear example. So there we go. We can see it right here. Just I'm gonna talk about it, but not in crazy detail, but just to catch you guys up with what is seen on the charts, right? So as we can see very clearly here that this is absolutely an inverted head and shoulders, and it just wants to break this resistance line, which we are absolutely attempting to break right now. And let's zoom in on a very low time frame, and I will explain to you guys what I mean. First of all, we broke above this 55 EMA, right? We broke above that 55 EMA on a higher time frame. Now, I want to talk about this as well here. Don't you guys worry about my liquidation price. I assure you that would never ever happen on my end. A lot of people have joked around. They're like, oh, it looks like you're going to get liquidated. I'm like, no, I keep a very specific amount in my margin account just to make sure I don't overplay it. So, so here, what we see is this fanning out, okay? This is actually a very good formation on the 55 moving average strategy that I employ. Every time we see it fan out, and we see it being rejected to the downside. So for example, we're getting a lot of rejection, right? Even piercing a little bit of the 8 EMA. So we're hovering above the 8 EMA right now. On the 6-hour chart, we're not quite there yet, breaking above the 55 EMA. But what we do see is this massive inverted hammer that's forming. Massive inverted hammers, massive hammer right here as well. Inverted hammer, inverted hammer, inverted hammer. And then here, it finally shoots through it. And that's a very positive sign, bouncing off of the 8, 13, and the 21 moving average. On the 1-hour chart, we are clearly in an uptrend on the 1-hour chart as well. And the reason why we consider this on an uptrend is because of this moving average that starts to fan out. So it's looking really good right now on the moving average side. And we see this right here on the 3-hour, for example. It's really heavily bouncing off of the 55 EMA. And I want to talk about the indicators as well. So let's go over these indicators one by one. I want to make note, first of all, that on the daily chart, the volume is slowly declining, and that worries me. What this signals to me is that, yes, we are uptrending right now, But we're only going to reach a very specific point, in my personal opinion. And the reason I think that is because of the volume, right? So I think that we are going to get an uptrend, but it's not going to be the kind of crossover that we're wanting yet. We're going to get a crossover, in my opinion, something like this. And this right here will slightly go up like that and then just come back down, because the volume is very indicative and implicative that we're not in a massive uptrend yet, okay? On the 4-hour chart, we definitely see it gaining strength here. We see it gaining strength, but the question will be, for how long will it gain strength for? We see the RSI that's moving in a nice channel right now, beautiful channel, there's no denying that. We see the MACD hovering positively as well, right? Positively, but the question again is, for how long is it going to go up there? Now, I want to correlate this to an uptrend on, for example, over here, okay? Now, would you guys consider this an uptrend? Let's talk about from November, when it was about 6K, right? November, when it was about 6K. Let's go to a log scale. Where's log here? I don't see it. There we go. Let's go to log scale so we can see it a little bit better here. So if we notice on an uptrend here, it's clearly gaining volume, right? And on the small corrections, you're dipping in volume. So if we consider this an uptrend right here, where's the volume for it? Why is it dying off? That's of critical concern. And also, if we were in a massive uptrend, why is it not peaking up into very heavily overbought regions? Let's go to a 1-hour chart, for example, on Bitcoin, and let's talk about what an RSI bullishness looks like. So if we go to, for example, way back to January, December, etc., this is what a bullish uptrend looks like. So we have to question a lot of things, such as, is this really a bullish uptrend that we're in now? These ones are reaching, we're talking about extremely overbought zones. It's reaching 90 regions even. It's reaching even 85, etc. and up. But now, if we go over here, ask ourselves, guys, why is it not reaching a ridiculously high RSI right now? Doesn't that make you wonder just a tiny bit about what's going on and why it doesn't exactly fit the criteria of a beautiful uptrend, right? Now, let's say I went to the daily chart as well. This is what impulsive moves look like, okay? They move very nicely upwards, right? Very nicely upwards with very clearly defined peaks as well, where it's almost parabolically moving up. Now we look at this right here and we say to ourselves, is this parabolically moving up right now? Not really. So let's go to Bitcoin long and short. What we see on the Bitcoin long table, say in the 30-minute time frame, is that a lot of people are in long positions right now. And if we go to BTC short, for example, we're talking about 37, I think, 1,000 there. And we see that last night, guys, a lot of people got liquidated. Lots of people, or they got liquidated or they liquidated their positions. What we see here since February 11 is that it's completely being sold off, their short positions, and they're closing them. That's why we're only in about 10,000 short positions here right now. So we can confirm with certainty that there are more people who are bullish than they are bearish right now. But that doesn't concern me too much at the moment. So I wanted to talk about another perspective as well. Price action. Price action combined with Elliott Wave. When we look at it from that perspective, we think to ourselves, well, first of all, Elliott Wave is not making 5 beautiful patterns right now. Not at all. Far from it, actually, okay? And we talk about price action in terms of how these candles are behaving. And these candles are not behaving in a very impulsive move up. So I'm led to believe that we are going to uptrend, but because of the volume and because of the price action and because of the lack of impulsive moving up with Elliott Wave, I can't help but assume that we are going to move up, but to a very specific point only, or a specific range, and then we're going to correct further. So before I go into that, I would like to talk about Elliott Wave WXY patterns again. Right now, we are in a WXY type of pattern, okay? And in WXY, we get 5 waves coming down, or we get an ABC rather, coming down here, as you guys know. We get an impulsive move up that goes like this, and it tries to break into a wave. And a lot of the times it will fail. And when it does fail, it makes an extended ABC correction like this. An extended ABC correction like that. And then it tries to make an impulse move up again. And this is the one that we're basically on right now, this red one. And I do believe that it's going to fail, okay? It's going to fail because of all the characteristics that I'm mentioning right now. And when this fails, it will make an extended ABC correction again. And now, instead of becoming a WXY, it does a triple Elliott wave combo, like this. X denotes the first failure, Y will denote the second ABC run, another X will denote the impulse wave fail, and a Z will denote the final zigzag. And this makes an 11 wave structure. So ABC alone makes 3 waves. ABC and ABC again with a WXY will make 1, 2, 3, 4, 5, 6, and 7. And then this one is the 8th wave that we're on right now. And then if it fails again, it makes another ABC, which adds another 3 onto it. So then we are actually going to be at 11 possible waves. And if I zoom into the daily, we can actually see 7 right now very clearly. We see 1 peak, right? We see 2, like this. And then we see all of this down here, right? And now what this actually makes is, let's go to a different time frame here. We see, of course, 1, and then 2, 3, 4, 5, 6, and 7. That's how it looks according to Elliott Wave right now with WXY, right? 1, 2, 3, 4, 5, 6, and 7. And I mentioned that we were on the 8th one, and here we are on the 8th one right over here. So now we really need to talk about this specific structure and how we would label it. So let's go into this in lots of detail, guys. Let's go to a 15-minute chart from the very beginning, and let's start labeling this properly, okay? Actually, let's maybe a 30-minute chart. I don't want to go into too much detail about all of that going on here. Okay, ready? So the first thing that I'm going to have to accept, unfortunately, is that Elliott Wave says that the third wave is often the longest, but never the shortest. And in order for us to consider that this is a very strong uptrend and impulse move up, we need to have a clear indication that wave 3 is in a massive uptrend. And the wave 3 should conform to those rules. And because it does not conform to these rules, we can automatically deduce that this is not the cleanest wave up. And wave 3 can never be the shortest. So for us to fit these criteria right here, we need to first of all check Elliott Wave and see which one is longer. So we see that this one moved up $1,313, and then we see the next one move up $1,100. So wave 1 is the longest, wave 5 is the shortest. So can we actually consider this right here? Can we consider this right here 1, 2, 3, 4, 5? And the answer is yes. We can absolutely consider this as 1, 2, 3, 4, 5. It's not the cleanest wave, but it does fit all of the rules of Elliott. And I like this quite a bit, where we were basically just waiting for it to break out of here, right? And as soon as this counted 1, 2, 3, 4, and 5, this actually hit our target pretty well there. Of course, it downtrended, and then it actually hit our mark here. If you guys remember our targets, despite me not getting the correction wave wrong, we still hit the mark, right? And that's the important thing. So now that we see this as an impulse wave up, the next part that we have to ask ourselves is, what is this whole structure? Now, the way I see it is this. We can see it as 2 different kinds of counting. One count, well, first of all, let's check our retracement. We nail this correction right here very, very easily, I would say. Right above the 382 Fibonacci level, right? Not too bad at all. And the way that I see this that could be counted is this could be A, that could be C, and like that. And then now we would consider this an impulse move up, right? This would be an impulse move up. And I'm going to explain to you guys why I would consider this an impulse move up. I'm going to delete this now that we have it out of the way. Let's delete all of this. So I see this right here. Actually, nah, let's keep it on there. Except for the price, we don't need that anymore. So the way I see this now is this is a wave 1 in here. Actually, sorry, right here. Let's make this a different color. It's much more visible. I see this as wave 2. I see this as wave 3. Hey, I want to give you guys a quick tip that somebody taught me on Twitter, okay? If you ever want to clone a line, hold down Control, right? Just hold down Control, click on a line and hold down the mouse button and drag it somewhere, okay? That's pretty cool. So if you want to clone your Elliott Wave as well, hold down Control, click on the Elliott Wave, click on the line that you want, and just drag it somewhere, and then let go of your mouse, of course, and it drops it. So that's a really cool thing that I've learned from someone. Thank you for sharing that tip. I don't remember your name, but shout out to you if you're watching this video, because it actually saves me a ridiculous amount of time, and I never even knew that you could do something like that. So now, we look at this structure, and we say to ourselves, is this an impulse wave 1? Is this a corrective wave right here? Okay. Now, let's debate this. I've seen some people who might think that this is not wave 1, right? So if this was wave 1, what we would call this is 1. We'd call this 2, like this. And then this would be a subset in here. So let's take a look and entertain this idea, all right? Let's entertain this idea that that's 1. And this is now going to be a subset of 1. 2. And this will be 3 somewhere, okay? 3, for example, maybe right there. And this would be 4, and this would be 5, somewhere up there, just as an example. And then all of this would make a wave 5, right? Something like that. And then, or sorry, wave 3, and then this corrects down to somewhere right here, see, above the wave 1 territory. And then we make one last hurrah, something like that. Now let's do some extensions as well to see if this is a possible target hit. So what we see here is absolutely, it's a possible target. Now, I'm not even going to entertain that idea that it could hit 161.8. I'm only going to assume that it's going to hit a 1-to-1 extension. So to me, this is a possible scenario where it hits about 10,400-ish, based on this scenario. Now, let's assume another scenario as well. Another bullish count, but in a corrective wave, okay? Let's say that this is not ABC. Okay, let's say, just say for a few minutes it's not ABC, and that this is actually ABC as well. Now, never discount the moment, or never discount that ABC, the B point, can easily terminate well up there, right? And then we get this right here. That's not bad. That's a not bad count as well, where this could be seen as almost a head and shoulders, right? Doesn't exactly fit my criteria of actually. It doesn't exactly fit my criteria because this is an extended part here, but it definitely does look like a head and shoulders there as well. So this is the left shoulder, this is the head, right? And just like that, where we bounced off of it very nicely. So we would consider some of these regions bull traps, right? Or sorry, bear traps, where people thought it was actually going to go down, but of course they just ended up trapping them down there. So let's say that we consider that right here, ABC as well. Then this would mean that this is the start of the impulse wave, and then it would go something like that, right? Let's just say that goes to something like that, and like that. So regardless of what it is, what I do believe is that this wave is going to fail, guys. I pointed out a lot of scenarios where there will be failures in waves, and let me explain to you guys how waves can fail, okay? Let's talk about this first wave first of all. Elliott Wave says this specific rule that must be acknowledged at all times. He says that wave for failure, actually for it to be considered an impulse wave up, wave 1 criteria must be met, right? Or so wave 2 cannot retrace more than 100% of wave 1. Okay, that's one rule. And the second rule is wave 4 cannot retrace more than 100% of wave 2, right? So once again, wave 2 cannot retrace more than 100% of wave 1. Now, if we remember way back over there, we saw that wave 1, so we use this right here as a support. If it retraces more than 100%, wave failed. Now, it could retrace, even 99.9%. Now, I believe that this wave right now has been successful, the first wave going upwards. So, perfect. That fits my criteria. Now, the second wave states that this cannot retrace into the territory of wave 1, right? It cannot retrace into the territory of wave 1 by more than a wick in a leveraged market. But let's say it retraces into here. I'd be very worried already, okay? I'd be super worried, and I'd be wondering to myself, okay, first of all, this retrace into the wave 1 territory, is it going to make some sort of expanding diagonal, where a lot of the times these diagonals can actually overlap each other? So I'll say to myself, okay, this is not the cleanest wave right now, it's over here now. Is it going to make some sort of awesome pattern that's an expanding diagonal, which is fairly bullish in general? That happens sometimes. We do see it, right? And then we get our fifth wave up like this, right? A fifth wave up to make this. So we think about all of these things, right? So now let's say that it does not make a nice pattern that we want, and it retraces into the wave, retraces 100% of wave 3 here, then this would be considered a failed wave already. And boom, we are automatically in a WXYZ corrective pattern. And I hate to admit it, guys, but I'm going to say right now that I firmly believe that this is not the end of the correction. And this small uptrend that we're getting is a last hurrah. You guys got to look at the volume. Like, look, indulge me and look at this volume. It's kind of embarrassing, actually. We're not getting the kind of volume that we're wanting. You know what? I got to go to CoinMarketCap and actually look at this really quickly first, okay? So now we've got only a few hours left to go in the day, guys. That's it. We're talking about 3 hours left to go until a daily candle. Now let's look at Bitcoin. We're only at $5 billion, guys. That's it. Like 5 billion? That's embarrassing. I mean, look at this. This is where the uptrend started on February 6th. We're at 14 million, 9 million, 9 million, 6, 7 million, 6, 7 million, 6, 7 million. And today, horrible volume. So I think that we're going to make one last hurrah attempt. And then after that, guys, correction time further. I do not believe that we're gonna end up getting to some ridiculous highs. I don't like this idea, this ABC, the way it's looking right now, because simply this B point is just too high, okay? So I'm left to assume that relativeness or relativity is important. So we have to take something that is relative. So this might be a better count in my opinion. 1, 2, 3, 4, 5, and this is very relative. And we maintain this bullish scenario and retrace to about the 382 region, which was right above the wave 4 territory. Because what I mentioned earlier was that the wave 4 likes to retrace to the wave 1 territory, because the wave ABC likes to retrace to the wave 4 territory because it acts as a support. And let me give you an example of what I mean. So first of all, we say that wave 4 cannot retrace into the wave 1 territory because wave 1 acts as a support. And now, because this previously was a resistance, it now becomes a support, right? This is now a support. So because we have two supporting points right here, a very common place for C to end would be right here in this territory. Now, it took me a long time to understand that, and I hope that that makes sense to you guys. That so right now we're at very quickly, we're actually at we're in a pretty good position right now. Right, here's my position in my little tiny $7,000-8,000 position there. We're now uptrending. I'm now positive, right? And I do believe we're going to break into some higher highs here right now, into the $8,000-9,000 ranges. So I just want to give you guys an update of my position to be transparent as well. So I was saying, back to this again, that C likes to retrace right to the territory of wave 4 and wave 1 because it just makes sense for it to fall back to a previous resistance area that now becomes a support, and also to the wave 4 territory that's now a support, right? So we look in this particular area. That's where I called the support there in one of my other videos. I think I did it, or it might have been on Twitter. I can't remember exactly. So here, what we get, right, is perfect. So this makes sense to me, where it retraces a 382 fib level and right into the region of wave 1. So I'm going to accept this as my valid count now for ABC. So I'm trying to rationalize everything right now. We have, as you know, like Sam says, Trading Devil, we are technicians, right? But myself, I'm an engineer. I'm an engineer, and I believe in workflow. I believe in a systematic and a very rational approach to trading. And I think that when we logically deduce what is acceptable and what is not acceptable, then we can easily figure out, based on Elliott Wave, what is acceptable, what is not, and what is the best possible count as well. So what I love about Elliott Wave more than anything, guys, is its systematic approach. It's a systematic approach that's based on pure logic and rationalization. Only some criteria can fit while others cannot. And that is the difference between a lot of Elliott Wave traders, right, and normal traders. That's why I think that Elliott Wave traders have a very big advantage when it comes to being successful in the market, because they can see things from a very logical approach rather than just price action and candles. Not to say it's better than any other way of trading, but it certainly has its advantages. And I think one of the main reasons why it's heavily frowned upon is because there's a lack of understanding for it. And because of a lack of understanding for it, a lot of people will bash on it, right? It's a very hard theory to acknowledge and to understand on a very detailed level. So now I'm going to consider this as my first impulse wave right here. I'm going to consider this a subcorrection of the third wave. I will see this as somewhere up here. And I will see this somewhere down here. This is just an example. Don't worry, I'm going to give you guys some specific scenarios that I think could happen. So does this make sense so far? 1, 2, 3, 4, 5 going up. And now we're going to get targets. I want to give you guys a quick example, first of all, of how I think it would look and where it could possibly fail along the way, okay? So just as an example, I think it will look something like that, where that is 1, this is 2, somewhere 3 is up there, which we will pinpoint with extension soon, 4, and somewhere 5 up here. Just something like that, right? Now, let me show you guys how we can derive extensions based on the first wave. So what I'll do is I'll take my Fibonacci extension, and I'll go from points 1 to 2 to 3, just like this. Now, what I will assume is a few basic things, and I'm a very conservative trader. I do not overshoot, and I don't like to undershoot as well. I will go for roughly somewhere in between the 100 and the 161.8 extension right there as wave 3. And then the wave 5, I might be a little bit more aggressive today about it. I think that we're going to get to somewhere around 12,000. Let's say it's slightly higher. Let's look for some relevant support points. Let's go back a little bit and see what are very relevant support points. And another thing I want to make note of is, do you remember how I was talking about the base range of a head and shoulders and how it basically applies, right? So if this right here was the head and shoulders, where it goes like this, left shoulder, head, and the right shoulder right around there, what we like to do is we like to take the base range of the head to the neckline, and then we use that as one of our first targets. And what we can see is that the wave 3 certainly could possibly, using that type of target, reach around here, these ranges, okay? So that's going to be one of my first targets right here for this specific wave. And I'm going to go into even more detail about how I'm deriving these targets as well. So let's go into a lower time frame, say a 30-minute chart here. That looks pretty good. So now that I've got some of my targets up here, I think today the trading range will be about, I don't think we're going to get higher than like 9,400-ish. So today's trading range is very, very low. So those are my general targets for today. And this one, I think it will reach roughly around there. Let's go back out again. I forgot to do that. So I cannot see this particular wave right here reach a higher point than, say, this area somewhere over here where there's a lot of resistance and supports. So where can we pinpoint this right now? I'd probably say this particular point around 12,000. Right there. So I cannot see it getting higher than that point right here, say 12,057, like one of the absolute highest points, okay? Now let's see if we can actually pinpoint it with even more sloped resistances and supports. So let's say I took it from the highest peak there, like that, and boom. That is where I think that we are going to fail. right here. I can even consider it more conservatively by considering or accepting the fact that some of them are going to be bull traps, but I will choose the absolute highest point that I think that the highest point that this will reach, maybe even for a bull trap, is in this particular region right here, where people will think it's going to break out, and then in this specific apex, people are going to get trapped there. So my scenario will stand that I think the highest range it will go to is round number. $12,000 is going to be my number because it meets a lot of my criterias of this, okay? If I take my Fibonacci extension right here, I will assume that wave 3 is often the longest and never the shortest. Now, please ignore the dates. I trade mainly based off of price action, right? I don't really focus too much on dates because I'm an Elliott Wave trader, okay? And now I just want to update you guys on my position here as well, right? So this is why I entered a position. Even though I entered a little bit early, I do believe that we are on an uptrend right now. Okay, that's why I'm $20 up already. And I will not close my position until I get much higher than this. So I think that we are doing incredibly well right now. Actually, I'm probably going to change this right now because I don't want it to close during my video here. So 1989.95. So I want to just show you guys by example and to show you how transparent I am as well, okay? That I believe we are uptrending. That is why I have now entered a position right here, or earlier. So once again, wave 3 is often the longest and never the shortest. Now we say to ourselves, where is wave 4 going to retrace to? Well, this one retraced very bullishly. Let's get into some theory. I love theory. So wave 1, 2, 3, 4, and 5. Now these usually alternate in terms of Fibonacci retracements, okay? They alternate, and what we assume is that wave 2, if it retraces very bullishly, for example, to 382, then what we'll assume about wave 4 retracement is that it will retrace more and up to possibly a point of Elliott wave like this. So we will assume that it could retrace all the way down to here because Elliott wave retracement here only came up to 382. We will assume wave 4 retraces more. So just to give an idea of our extensions, right, we assume that wave 3 will hit slightly higher than 1-to-1. That's just me, guys. And then wave 3, or wave 4, sorry, 5, is about 161.8. Now, there's always the argument that people will make, and I will be heavily criticized for this, I know, okay? And the reason why I adopt this mentality of that this is possibly the maximum or a conservative approach is because I'm conservative. Everybody has a different method of analysis, and what a lot of people actually do instead is this, which I agree with and don't agree with because I found that personally for me, it has gotten me way more into more trouble than it's actually helped, okay? So then what people assume is that this right here, wave 3, can go to 1-to-1, and they target even higher, guys. Like, they target even higher. Like, they go like 261.8 or even higher than there, like that. That is not me. That's too unrealistic because I've been set up for a lot of disappointment and failures before. So I like to adopt a very conservative approach, and I believe that my approach has been working very well thus far. Okay, so once again, I would like to recap this, okay? Wave 1 extension to 2 over here, a 1-to-1 ratio, and we will basically hit about this upward boundary, $12,000, no more, guys. No more than 12K, okay? And then we will retrace to roughly wave 1 territory up to about 6.1 or 61.8, we'll see. And that would be a perfect number. Above wave 1 territory, let's delete this really quickly, right? Above wave 1 territory is about right over here, and possibly around here. So we might retrace to about 8,900, and then finally we make one last hurrah attempt to somewhere near 12K, between 12, my second range will be, you know, between 11.5 and 12,000, and that's where I feel that people will get trapped in this particular apex, because this is really hard to deny, right, guys? This major resistance over here, that psychologically, it's a big resistance, guys. So that is where I stand right now, and I would also like to correlate it using a double confirmation method while factoring in the first subwave of the third wave, okay? So this is a way I love to use for confirmation, and I'm going to show you guys it as well right here. So now that we have our general targets of our 1-to-1, which I will actually put over here for us, 1-to-1, whoops, from here to wave 1 territory, and then where wave 2 corrected. So once again, if you guys remember, that this is how I'm deriving my targets. I don't think that will hit it exactly. You know what? Let's change this number to right around here. 161.8, around there, okay? I'm going to write it just so I can hold myself accountable when I'm done this video over here. Now we're seeing a little bit of struggle going up here. It's a little bit funny watching Bitcoin go up and down right now, which I don't mind, and it's pretty cool to see today. So now I will use right here. If this was considered my wave 1, oh, actually that was wrong. This was actually it right here. Okay, I'm sorry guys. There we go. That's a lot better now. And I'm going to assume the same type of symmetry, right? I will assume the same type of symmetry. And now the bulls on the order book, I want to go over this really quickly with you guys, okay? The bulls are actually taking over now because in the level 2 order book, this guy just decided to stack up 65. And there's a lot of computers that trade, right? They also gauge it based on how many people are stacking up to buy right now. So what we're seeing is a massive demand right now. This side is this is called the level 2 order book. And the level 2 order book gives you an indication of momentum changes. It's better than RSI, it's better than MACD. It's like the best thing to watch for in real time because all those other indicators are lagging. Now what this shows right here is that there's a massive demand because of these walls. Think of this like a tidal wave, okay? And with a tidal wave, the bigger side will like to splash over to the smaller side, especially when you're seeing walls of green, right? You're seeing walls of green earlier there. And these walls were getting bigger, it wanted to push it over. So it was creating a lot of demand, whereas there was little supply. So because there was very little supply and a large demand with walls that filled up with green, and it still is, it's naturally going to push it up there. Think of it in terms of scarcity, okay? If you think of it in terms of scarcity, well, if you have a very low supply of something but a high demand of it, what will happen to the price? It'll be driven up, right? Imagine if water was very scarce, okay? Now, I'm no economist. I don't know anything about business, but just generally speaking, right? If everybody needed water, right, and there was a very limited amount of it, and everyone needed it, don't you think that people would pay a lot more for it? Why would the price be very low if a lot of people needed it and there was a scarce supply? But if there was an unlimited amount of anything, and, you know, and the demand wasn't that high, then of course the price of it will be driven down, right? So I always like to think of it from the perspective of just basic supply and demand as well. Now let's assume that this was our wave 1 here, okay? And now I'm going to clone this and move it over. And then now I'm going to clone this as well. And let's say that we also take this right here and we assume that this is the slope of it. And now I will move it over to roughly over here, okay? And then now I will assume another one, this one maybe right here, it's better. And then now I will assume another one like that. So my hit is literally right around this resistance line. And I can't help but assume that now it's going to be roughly something like that, just based on symmetry of the lines. And you guys would be blown away sometimes by how symmetrical these things can actually work out. I mean, we're talking about trend lines as well, remember? Trend lines are a beautiful thing. So I have confirmed, guys, that first of all, if we remember here, first target hit, using the head and shoulders rule of taking the base range on the breakout. Actually, I did that a little bit off there. That it could absolutely hit our first target, which is around 11, I'll say about 10,500 at most, and the next target would be about $11,696. Now, this whole thing right now, I believe, is making a subwave, right? Oh no, I think I did it wrong there. Yeah, I'm so sorry, guys. I gotta do that part again, okay? I gotta do this part again, based on over here, okay? Because I drew the wrong extensions. My mistake. So that goes like this. This one goes like that. Here, you know, that's probably not realistic, guys. That's obviously not realistic, the slope. So that's not realistic at all. So let's more so eyeball it. My mistake. Sorry, guys. Mistakes happen. So let's go for a little bit more of a slope like this. Just based on how everything is looking in here, we can kind of see it just going upwards like that, right? So let's assume that this one is eventually going to crack upwards. And we'll assume that this one doesn't go to wave 1 territory. And then finally, the last wave will go somewhere up there. I'll still say 11,700. Now let's take a double correlation method that I was talking about earlier. And then we take our wave 1 here, we take wave 2 here, and we take this right here, just for the third wave, okay? And what we see is that, yeah, it's most likely going to hit a possible target, where this is wave 1, that's 2. Wave 3 will be higher than the 1-to-1 extension. Remember how I was talking about wave 3? I always target slightly higher than the 100 to the 161.8. So let's assume that this will be all right. And now let's assume this one will retrace very, very bullishly instead. And then now we get up to our fifth wave, something like this. And I believe it will retrace back to almost the territory of wave 1 right here. So we use this as a very general guideline, right? Wave 1 territory does not retrace into it. And because we know from Elliott Wave rules that they alternate most of the time in terms of retracement, well, if this one retraced 786 level, then I will assume a very bullish scenario of this one only retracing up to the wave 1 territory, okay? Up to the wave 1 territory only, and not below it, and 386. Perfect. So if this one retrace right here to the 386 range, or sorry, 786 range, I will assume that this one will retrace only to a 382, because it just makes sense based on what we've talked about earlier. So using a correlation method like that, it seems to be working out well, where this one here will retrace 382 based on this extension, right? I think today the trading range will be up to about, I don't know, maybe 9,500 at most, okay, just to be very clear. And then we trace down here to roughly the 1-to-1 extension level. So this was a perfect 1-to-1 right in here. And then the next one, we hit this range up there. And the next one here, this is where I believe it will fail. And then we will get an extended WXY correction. So those are my targets, guys. Based on everything that I've talked about and have deduced, I cannot help but think that we are definitely in a bullish uptrend right now, but not long term. Not long term at all. And then we will get maybe 5 waves, maybe it'll even fail. I have to be very clear right now, okay? That we don't know when the wave will fail. If this right here ends up retracing down here below the wave 1 territory, I would be concerned, okay? If it retraces all the way down to like after it hits our target, if it came back to 7,800, that's where we should all start being concerned. So I can't help but assume bullish this for now. And then eventually we will retrace a specific amount down there. If it actually hit our target, I think that the lower range that it'll hit to, geez, this is a really, really, really difficult one to pinpoint, right? Like I can't help but think that the bottom is, yikes, like I have to say about $5,200 still, that my bottom range will be about 5,200, right? And I'd say like the lower barrier that it's going to hit is probably around, Bitcoin really likes, first of all, the 786 Fibonacci level. So I can't help but assume that it's going to target somewhere right here around the 72 to 7,500 range, right? Actually, I'm going to say the upward range in the golden pocket, near the golden pocket. So I'm probably going to guess somewhere above 7,500. That's going to be the lower barrier. And then the absolute bottom, I think, will be about 5,200, 5,300. And I think that the upper barrier that we're going to reach and breach today is roughly, roughly right here, around 9,000. No, today it'll be about maybe 9,500 at most. Maybe I'm being a little bit too aggressive. So let's take the lower end, about 9,400, okay? I'm gonna write this out to be very clear as well. And then I don't think we're gonna breach about right here, guys, 11,700. So let me write this all down for you guys to know, okay? So first of all, my target one, like all together, okay? My target altogether is roughly about $11,670. $670. I think that the bottom is equal to about 5,200. I think based on my previous analysis, I think that the lower barrier is equal to my golden pocket zone right here, around 7,600-ish. Okay, actually, yikes. You know what? I'm gonna assume, yeah, I don't want to say 7,600 because it would be agreeing with every analyst, a lot of analysts out there. You know, it would really agree with, but I can't help but make that deduction as well, somewhere between the 786 and the 6.5 region. And I tried really hard, and I did actually do this technical analysis for myself, even before I watched any other people's videos. And I couldn't help but realize, oh my goodness, that we all agree right now. And what worries me is that if we all agree, it is up to the very last person to disagree, right? If 10 people who are sitting in a table are making a decision and 9 of them agree, it is the 10th person's responsibility to disagree, because he has to cause some sort of controversy to create argument and debate, right? So that's how I see it. But in this particular case, I can't help but assume that it's also $7,600, that range. And I believe that my upper barrier for today, okay, is going to be roughly about 9,400 at most. 9,400. So I hope that this is clear and concise enough for you guys. And I also want to say that my long-term target stands, guys. That long-term, my target, we're talking about months, okay? It's still 30,000 based on my previous conservative analysis, $30,000. And this is for you, my friend. I'm doing this for Famunger, right? He's I respect him highly, okay? I respect him incredibly highly, and I have to give credit where it's always due. And I'm talking about the person Famunger on steemit, where he spends a lot of his time, in fact, a ridiculous amount of time looking for the community, and I have nothing but the utmost respect for him. Because what he does is he compiles a lot of different technical analysis from very respected ones as well. So I cannot imagine the amount of time that he puts into watching my videos and also compiling all this data to make it into a very relevant point. If you guys are unsure of who I'm talking about this gentleman here. Hello to you. I know that you're watching my video. He has included me in his top analysis on steemit. So on steemit, we're doing an analysis together, and he takes a lot of the data and he puts it into a very cool spreadsheet, and just to give different perspectives of different people, right? So shout out to you for doing this. I really respect your work and your dedication to the community by donating your own time to let the general public know where a lot of people stand and to creating a summary. I mean, if you guys were to go through every single technical analysis, you guys would be, wow, I can't imagine the amount of time, right? So I highly, highly recommend that you guys follow this gentleman, Famunger, right? You can go to my feed and you can find him. Please upvote all of his content, as I always do as well. I upvote his content because I highly respect it, and I always re-steam it as well. If you guys don't know, right, this is the upvote button and this is the re-steam. What re-steam means is basically sharing it, right? It's like retweeting it, basically. That's what it is. So anyways, got to give credit where it's due. You guys know exactly what kind of person I am. I am not the kind of person that would like to be in the spotlight. I'm the kind of person that will gladly 100% give credit to where it is due. So these are my thoughts, okay? These are my 100% thoughts for this was a very detailed analysis, and it took a lot of brain power, and I've been hammering at it for over 12 hours now altogether in the past few days. And I do believe that that is where we're going to stand. And my lower barrier, guys, like, don't forget, okay, like, I really do believe that we're still going to get to somewhere down over here, like 5,200 ranges. So this is where I think we're going to bounce first. And another bounce that we're most likely going to make is, of course, a double bottom here, just to test it. But this is kind of a temporary support. It's very artificial right now. It's artificial because we haven't tested it twice yet, right? And I think that we are going to test it and fail. Because based on all my analysis, I do think we're going to hit somewhere to 5,200. So that is where I stand, guys. I will be sharing this chart on steemit. And please make sure you guys appreciate the work that I do as well. Please upvote it on steemit, right? I get a lot of views on there. We're talking about 8,000 views on steemit, but I only get about 100 to 150 upvotes, which is a little bit disappointing considering the amount of work I put into the community. Not that I'm expecting anything in return. Do not take that the wrong way at all. It is not about the financial aspect on steemit. It is the main goal of growing the community and reaching a broader audience. In a way, it is almost like marketing myself to reach a broader audience. And my goal, please remember this, guys, that my goal is to grow the community and reach a big target audience, right? And the more people that have access to these charts, the more people that have access to these free materials that I'm producing, right? I made over 22 tutorials so far, and they're hours long. It's about 30 to 40 hours now altogether for all of them, right? I'm doing this because I want to genuinely help people, right? But I firmly believe that we need to adopt a very positive mentality and attitude of reciprocation and respect, most importantly, right? I respect you guys, and I want you guys to be driven and succeed. I want you guys to have passion for the cryptocurrency community, but most importantly, I want you guys to respect the people in the community as well that are also trying to help you. So guys, I love you, baby whales. I hope you guys know that I love all of you followers, all of the subscribers on Twitter as well. And my goal is to ultimately want to see you guys succeed, and at the same time help me succeed as well by reaching a broad audience, right? Is that fair to say? Am I being unreasonable? I don't think so, because I know you guys love me and I love you guys. So these are my thoughts for Bitcoin. This is going to be my February 12 detailed technical analysis that I really hope that you review, and I will be sharing my thoughts on Twitter, and I will also share my thoughts as well on steemit. Make sure you guys like, subscribe, and share to all the material as well, and make sure you guys have a fantastic day. Eat a lot this week, guys. Eat a lot, sleep a lot. It is going to be an amazing week, and I hope you guys join me this week throughout my cryptocurrency journey. So have yourselves a great day, and thank you for all of your support and all of your love. Bye now. Oh, by the way, I forgot to say bye, baby whales. Ahoo! And mini dolphins. Make sure you guys go chase those seals. And every time you guys see a seal, make sure you guys hunt them. And you guys know what I mean by seals. When I say seals, I'm talking about profit. So bye, guys. Take care now.